Hi, everybody, and welcome to today's webinar. I'm Nicole, founder of TaxTank, and today we're going to be running through the property tank in detail and concentrating on all those little features that will help manage your portfolio seamless. One moment, I'll share my screen. Okay, so we're going to just log into one of our test users. Okay, and we're going to skip straight to the property tank. So the first thing I want to show everybody today is adding a property. So in TaxTank, we have 5 default portfolios: the investment portfolio, owner occupied, share properties, which is similar to the investment portfolio with some extra functionality to calculate claims correctly, the trust portfolio, and vacant land, which will enable the crystallization of expenses as per the latest legislation change. So if we choose one of those portfolios, we select an address. We add in our purchase price, the contract date, which is important because it will feed our capital gains tax calculations, the current market value or estimation, which can be updated later, and the settlement date. Your ownership percentage. The ownership percentage is also important because it will be what drives the tax summary calculations. Rental income, expenses, rental interest, and depreciation forecast, which can be from your tax return from the prior year. When you add a property, we have integrated with CoreLogic to get the average monthly growth forecast, which is over a 10-year period, and it differs from units to houses. If you think your property is more or less than the average, you can adjust the slider to make that as accurate as possible. And that's it. And once you've confirmed your property, they will show on the dashboard. Your dashboard is divided into different portfolios as per the properties that you've added. This top summary section is an overview of all of the properties sitting in a portfolio and shows the market value, equity position, tax and cash position. And making up those numbers, obviously these 2 properties, which this is the one we just added, and this is one that was already in this particular test user. If we click into the property, the first thing to do is add some pictures, which is a matter of just selecting which one you want to add. It's not a bad picture. And then obviously you can also move through your properties from this top tab here. So if we jump into this particular property, which has some data already, I'm going to show you through the tabs in detail so we can understand little features along the way. And then we're going to jump to bank feeds to show a quicker way to add income and expenses. So expenses is an easy little addition. We have bank fee transactions and cash transactions. Bank fee transactions will show up on your bank feeds to be able to select later on. Cash obviously won't. It's just for things that, I suppose, cash transactions that will have no bank transaction associated. You can type in a description. And so if we've done some rates, and we can put in an amount, the transaction date, and we select the category. All of these categories align with a schedule in the tax return, so they're all going to filter to the right place. And of course, you can upload a receipt. And as you add each transaction, they're going to show in detail in the dropdown. And you can also search through the history if you're looking for something specific. The income is a slightly different transaction because what we need to do with property income is get that variable between net and gross. So we'll do an example. So my net payment that I'm going to receive on my bank statement, let's say it's $2,500. And it's going to be rental income. And that's going to be for the month of July. And so what we do from net is add in any fees that are on your rental statement. So we might have some management fees, We could have a pest inspection. And we could have anything we want. We could have a special levy if it's from a real estate agent. But the whole idea is from the money that you receive on your bank statement, when we add back those fees to get to the gross income is what's reported in the tax summary. We can attach a copy of our rental statement and we can save. The system will automatically show you those transactions, and it will automatically record the expenses as well on the expense tab. It's a lot of management fees. Depreciation is automated, very detailed. So we're going to go through different components of the depreciation. Obviously, when you have a property, you can choose diminishing or prime cost, and it must be consistent year after year. Adding depreciation is pretty straightforward. In this particular example, we're using the diminishing, and we're going to add today something good, some ventilation fans. Description is fans. The amount is going to be $2,000, and we're going to buy them. Our claim is 80% because that's the ownership for this particular property. Whoops, we might need to have a bigger claim. And the closing balance is 0 because it was bought in this financial year. If we adjusted that to a prior year, the system will automatically adjust the closing balance forwards and backwards. Once again, we can attach a receipt and we press save. So under our plant and equipment, we're going to see that very expensive ventilation fan, and the system has calculated the depreciation schedule all the way to the end. A useful life is 20 years for this particular asset. If we needed to edit it for some particular reason, we can do that here. And if we needed to write it off, we would do that here as well. And we'll put the disposal date, and that's for things if you replace an oven or an air conditioner, to make sure that you don't miss any deductions on the value of that asset when you do that. For building, I'm going to show you a different property that hasn't got building. So if we go back to the property, oops, the one that we added today, this very big island, if we did a building depreciation, which is obviously 2.5%, but our building might cost 500 grand. And if we'd done that last year, oops, we can see the closing balance. We can adjust it if there's any variables from our statements, and we can attach any receipts. The system will automatically calculate the claim year after year. So as you roll forward to next financial year, all of these depreciation schedules will just move forward with you at the appropriate time. The other feature that we have in TaxTank to be aware of is structural improvements. And these calculations are extremely important also for the capital gains tax calculator, because structural improvements are an add-on to minimize capital gains tax. So at the moment, we don't have any groups, but if we were to do a kitchen renovation, for example, okay, we can have as many different capital works groups as we like. So then we would select that, and then we would attach any of those associated expenses for that kitchen into this particular group. So we might have bought some cabinets. And we might have also bought some flooring. And so what the system is doing is basically making a collection of all of those capital expenses to the kitchen, and the effective start date for depreciation is when the kitchen was completed, which is important. And if you estimate a start date and it's something different, you can just go back in and you can edit that particular DIY group. And as you can see in the kitchen now, we have those two additions, and we can see the claims, and we can see the total asset costs and the opening value. So as you continue to build out for each of those structural improvements, you can see what the actual true cost is to you. So depreciation is great. And the other thing to be aware of is we've automated some of the rules. So once a diminishing asset falls below $1,000, it can automatically be moved to the low value pool, and the system will do that automatically for you. Or if using prime cost and it falls below 300, we'll automatically write it off. So the next tab shows you the equity position. I'm going to show you a property that has a loan. So if we go back to this particular property, which has a loan, we can see that the market value and the equity position, which comes from the growth forecast, and it will be updated each year. And we can see the loans. So we can see the equity not only now, but it forecasts it over time. So we can see what the potential for this property performance will be based on CoreLogic's growth percentage. Over time, obviously, valuations will come into play. And so every time you have a valuation, maybe we had one today, for example, you can add those valuations and the appraisal letters into the system, which will automatically update your market value to keep things as true and current as they can possibly be. The property tab is an outline of all of your property components. So we have all of our capital costs can be added here. So these are the costs from when you purchase this property. The more information you put into the system, the more effective the calculations are. And in particular, the property or the capital gains tax calculator, which I'm going to show you in a minute. And you'll notice that all throughout the system, there's the opportunity to attach documents. And in the property tank, in our spare tank in particular, every property that you add will have its own portfolio. So every document that you attach that's specific, whether that's capital expenses, whether that's depreciation schedules, will all store in the individual property folders. And any receipts and documentation that you add to transactions will all be available under receipts. So just jumping back into Miriam-Vina, this particular property. Okay, so in this section, we have the capital costs. We can see the ownership, the purchase price. We can see the associated bank accounts that are linked to this particular property. And we can also see who it's shared with. Adding a co-owner is simple in TaxTank. I'm just going to jump up to our user settings in the top right-hand corner. This trial user has no one yet, but we'll add one. So we'll add Ruby 32. We'll select a property and we'll select the percentage of share. We'll ask if you're sure that you want to share this property, and we'll send that co-owner an invitation. Once that co-owner accepts, every time you update any transactions in TaxTank, it will also update in the co-owners, TaxTank and tax summary, so you're not duplicating any data entry. Once you add forecasts, you can also adjust them year after year, especially in future years, because rental incomes will change. And so to edit the current year forecast, it's simply a matter of selecting the pen icon and updating whatever figures are relevant. And of course, the sell property. So when you sell a property, or if you want to see what the capital gains tax effect will be when you sell a property, this is a nice feature to have a look at. So all the information that you enter into TaxTank across the year will populate here for you. So we have our purchase price and our contract date, and the capital cost from purchase, stamps, legals, and any other costs. Those structural improvements that I entered before, they're showing here as well, because they're obviously going to be an additional deduction. And the building works that I have claimed in prior years is obviously being deducted. So then it's a matter of entering your sale price. So maybe we sold this property and made a lot of money. We're going to sell it for $1 million, and we're going to sell it this year. Okay, costs of sales, we're obviously going to have some real estate commission. You never get out without legal fees and some other costs, which are totaling here. I'm of course going to upload any of my settlement documents, my legal letters, and any of my loan payout documents. If I have any capital losses, I would enter them here. So maybe I have some previous year capital losses. to ascertain my capital gain and loss. So on this particular property, I've just made myself 259 grand, not bad. And the next and the final stage, obviously, is to work out any exemptions. By default, the system has picked up the 50% CGT discount for this property because contract date to contract date has been more than 12 months, but potentially some of the other conditions may have applied. Obviously, this wasn't my full exemption principal place of residency, but we do have the 6-year rule, maybe it was, in which case then the system will adjust the CGT accordingly. Maybe this property was my home and became an investment property, or was an investment property and became my home, or maybe I have some home office calculations, or maybe I'm transferring the property because of a relationship breakdown or some other full exemption. Maybe you were lucky enough to buy it before 1985. So either way, you can kind of move through all of these different options. The 50% CGT discount is obviously the most common one. And in this particular scenario, I have just made a capital gain of $129,000. And if I pop over to my tax summary, and my other income, I can see that capital gain tax from that particular property is here. And I'm going to land myself a nice little tax position and tax payable at the end of the financial year to deal with. And once you do sell the property, it's marked as sold. More importantly, if you're just playing around and trying to see what the estimated CGT position would be if you did sell the property, you can jump back into the sell property button and you can just undo that. Okay, so in a nutshell, that is basically the different components for each property. Shared property has an additional functionality where you can choose the number of days and the square meterage to be able to calculate the correct claim. And if that changes through the year, then you can, of course, update those details. But the quick way to allocate transactions in TaxTank is via bank feeds. So I'm going to run through bank feeds for you now and those specific details for property investors. So adding accounts is pretty simple. You just select which bank you want to link to TaxTank, and then you select which bank accounts you want to feed through. And when you're selecting a bank account, you would select which tank. And if it was property, you would select which property. Once you've added all of your bank accounts, the system will automatically pull transactions to the 1st of July in the prior year, unless your bank doesn't permit that, but most banks do. So they will automatically feed through and you can start to allocate and you'll be up to date for the whole entire financial year. In TaxTank, you have different operations. You have allocate, find and match, and transfer. Allocating a transaction, you would select which property. If it was a different property, in this particular example, this bank account has been allocated to 21 Murrumbeena, and so that's why it's showing here as a default. And it's a matter of just selecting which category, which this is an interest on loan. I can attach any receipts and I can allocate. And as you allocate from bank feeds, it's doing the same job as if you were allocating and attaching expenses from the actual property itself. So interest on loans transaction that I've just allocated. You can also transfer. So for transactions from one bank account to another, you would select the transfer button and you would select the coinciding bank account and transfer. So when you do that, we actually look for that corresponding transaction on the bank that you've chosen. And if we can't find it, we won't let you do it because we will, on the other side, automatically transfer and allocate the transaction, which you can see in the account transaction history. And so then the other find and match option is for transactions that you've added in the property tank that maybe you haven't paid yet. So if we select find and match, for example, I've pre-entered some rental income, which I would match, and you would confirm. And so you can split transactions, or maybe you have added a transaction in the property tank, which is from multiple bank feeds. So you would just add those payments until you got to 0. The whole way through, you're building up all of your income and your expenses from the bank feeds. So bank feeds, we've got some nice little videos to watch on bank feeds. But then we'll move on to reports today, I think. So as you're allocating transactions, you can run the transaction report to get a nice little snapshot of everything that you've included year to date. You can search a particular account. You can search a particular property and property tank. Oops, we'll get rid of that one. And you can export into Excel. If you wanted to have a look at that data, you can search from particular ranges. And the whole idea is to really start to get some insight as to what these different transactions are and how this property is impacting your tax and your cash position. The other reports that we've added recently for tax is the rental property report. Once again, this is specific to the property tank, and you would choose which property you wanted to have a look at. Those of you who are familiar with the tax return would probably recognize this report. So it's the rental income and the associated expenses categorized as per the tax return. The claim is obviously reflective of the ownership. This particular property was claimed 100% and the owner's share. You can export these reports as a PDF. You can invite your accountant to your file, and they can also access these reports to be able to streamline the preparation of your tax return. You have the depreciation report. We'll come back to the low value pool in a sec. Once again, it's divided into tanks because in the work tank, you could also have depreciation for vehicles or other equipment. But the property tank specifically, you would choose which property you wanted to see. And then that would show you the claim, which is very familiar. Obviously, once again, these are tax summary reports and things that you would see at the end of your tax return. So you basically have all of the information if you're using an accountant or if you're lodging through My Tax. So we have the written off items, so items that are being written off automatically. And we have the building improvements. So we're splitting it up into basically plant and equipment and the building and improvement alterations at 2.5%. The other tax report is the low value pool, and anyone who's familiar with the low value pool, it's basically all of those assets under $1,000. And it turns out we have none in this example. So let me give you one so I can show you. So if we go back into this particular property, and if we were to add a depreciation item that is under $1,000, and maybe bought that. So you'll see that this particular item has been put in the low value pool. So if I was to run this report, now we can see the low value pool calculations. Now the other commonly missed deduction that we've captured in TaxTank is borrowing expenses. Borrowing expenses is tricky because when people refinance, they don't realize that their borrowing expenses are claimable over 5 years, but if they refinance it, they can basically write off that balance in their current year, which is missed quite often. Let me just show you how that works. So from the loan detail tab on bank feeds, we might have lender's mortgage insurance is up there, isn't it? We can update this data. And if we go back into this particular property, we've added borrowing expenses into the depreciation tab. So claimable automatically over 5 years, the system will pre-fill all future years and past years. And then if you do refinance this loan, we'll write off the balance of any borrowing expenses, so you will claim any residual in the current financial year. And that's very important because we never want to miss big deductions, especially lender's mortgage insurance. Okay, now if we go back to the dashboard, we do have a specific property tank dashboard. And what this does is provide an overview from the portfolio level. Some people may have an investment portfolio. Some people may have their principal place of residences added, some impacting tax, some not. But from this particular dashboard, it's the overarching loan to value ratio that we're looking at. The tax position is obviously only driven from those portfolios that do impact tax. But it's also giving us a nice little overview of our equity position for all of the properties in our portfolio, or we can drill down into an individual property, I should say. So from this particular dashboard, you can go straight into a property, and you can also see what's making up those numbers. And the system is automatically calculating for you the best performing growth and tax portfolio. And obviously at the property tank level, we're comparing each of the properties in themselves, because I suppose as a tax accountant, the biggest problem that we see is people selling the wrong property for the wrong reasons. They look at their tax return and they can see a big negative, so they sell that property, not realizing that it's actually depreciation making up the bulk of that loss. So that property is performing for them on a tax level and not actually costing them the money that they think it is. So it's really important to have a nice understanding of how these properties are performing for you and what they're costing real dollar wise out of your pocket each week, each month, and each year. So on our list of things that we want to do today is what's the other thing that we wanted to show you? Okay, so inviting an accountant obviously is pretty easy. Back to users, and inviting an accountant is a matter of just simply putting in their name and their email address. If they're not already an accountant partner of TaxTank, they'll get an invitation to join. And once they join, they'll be able to access your information, and there's no end of year transfer of data. They can basically log into your TaxTank and they can access all the information that they need to prepare your tax return. At the end of the financial year, when you're ready to commence your tax return, it's simply a matter of letting them know. So you can send them an email. Let's go into, we have invited Debbie. So Debbie hasn't accepted our invitation yet. So let's just go back into Debbie and we will do that. So we can show you how to message through your accountant. So this is the accountant's platform. And Ruby has invited Debbie. Okay. Okay, and so the accountant is then able to basically see everything that you have in there, making tax time a breeze. And then going forward, if you did want to message your accountant, you can do that via TaxTank. You can send information, you can receive documentation and everything in real time, which is a nice way to communicate and also keep a solid record of everything you need to throughout the year. So we have a little bit of time, and so let's run through some questions. Okay, that's a good question. Can I change ownership for a property? So in other words, if you have added a property and you put an incorrect ownership percentage, you can change that percentage. It's a matter of jumping into the property and over on the property tab and the shared with, and you're able to edit your ownership percentage here to, whatever it should have been. Okay, questions. Can I move a property? That's a good question. So obviously properties do change. Maybe you were living in a property and it became an investment property, or it was an investment property and you moved into it. So we have functionality to ensure that you claim the right amount of tax, but you also store that important history of market values, which will impact capital gains tax later on. So we have managed portfolio. Here's where you can add your own portfolios as well. If you wanted something specific, maybe you wanted to see your properties by a state or by some other category, you can manage property portfolios. But to move a property, you simply select move. You select the category. You enter the market value as per your real estate appraisal at the time. Maybe it was 800 grand. You select the date. So maybe I moved that on the 1st of the 1st. And you would upload your appraisal letter. This is really important because that's the piece of evidence that would require for the ATO should they ever ask. And obviously we have a history of moves to be able to track those things. And we would just move that property. And now you can see that in the owner occupied portfolio, I've just moved that property from a particular date. And with regards to our tax summary, that property would stop being effective from tax from the date that we moved it, because we moved it now as our principal place of residency. Okay, question on the first screen, where the property was set up, a rental of 20,000 was used. How does this reconcile with the monthly statements from the property agent? Okay, so when we first added the property, we put in an estimation of rental income. So if we go back to the dashboard, this is our forecasted tax position. So these are our properties. Who are we in? Ruby 16. If I go back into, sorry, the financial years as well is important. So we've got current financial years, and if you need to move back into financial years. But basically we have our forecasts and we have our actuals. And as the year progresses, we're allocating. Our actual forecast position is updating in real time. When we're adding our properties, we're basically creating a forecast so we can have an estimation of what our tax position is. And we can compare that to what our actual going forward. So we've got some understanding, but we're trying to improve on it. How do you work with a property that was purchased in 2008 and has a tax record over many years to enter? So you wouldn't be entering your tax income and expenses from 2008. For a tax perspective, you would be managing all of your transactions and things for the current and prior year. But any capital expenses, all of the depreciation is automated, and we work backwards. So from whatever that start date is, if it was 2008, we would calculate all of the depreciation, capital expenses across time. So your current financial year would be up to date. But yeah, you wouldn't go back and enter all of those years because you would have already lodged your tax returns, but you can most certainly store prior year tax returns and any historic data and then move forward. Do we have any other questions? Yeah, okay. Tax summary. So in the tax summary, the question was, how does TaxTank break down the different properties in the tax summary? So once again, everything's on actual and forecasted. If we have a look at actual, we can obviously, all of our graphs are adjustable. But when we drill down into the property tank, in your tax return, these are the reported features or items that we call them. And then obviously you can drill into these a little bit further and you can see which properties are making up this particular number. And so you can really start to understand what your net tax position for all of your properties and how that's impacting your tax negatively or if they're positively geared. And you can get an understanding as to which properties are performing more effectively for you. Capital works in particular, obviously they're those soft dollar costs that we were talking about earlier. When a new property is purchased, there is usually a depreciation report. Would that be the same as the calculations in TaxTank? Yes, it would be. And so when you are adding, you would obviously add your depreciation. It would be a one-off thing that you would need to do. And if there was any variation, so for example, maybe I'm adding an air conditioner that I bought last year, and my closing balance is $4,126. So in TaxTank, we work off the ATO depreciation rates to ensure that there's never any question as to what those claims are. But if there was some difference, or if an asset wasn't moved to a low value pool automatically in prior years, you can simply untick this box and you can change the closing balance and tick it again. And we will then pick up with that closing balance moving forward. Okay, do we have any more questions about the property tax? So in short, I mean, property, well, I suppose the property tank dashboard and everything associated is designed to enable individuals to be able to better manage their properties, whether they impact tax or whether they don't, because it's not just about tax, it's about being aware of your overall position and equity for acquiring. And if you are thinking about selling properties, and obviously which properties are the right ones to sell. Oh, and one more question. I mean, the depreciation for the property, not as an individual asset. Oh, okay. Talking about building and improvements. Yeah, so building and improvements, it would be the same. So if you are putting in a building from whatever date, and if this closing balance was something different, or maybe there was a different rate or some adjustment put in place, same thing, you would untick this box and you would adjust that closing balance. So going forward, the correct claim will be calculated, and so there'll be no overclaim from a depreciation perspective. How do we pay for the usage for TaxTank? TaxTank is a monthly subscription. There's no lock-in contracts. So really it's a monthly, it starts from $9 and the average property portfolio was $24 a month. And of course, it's fully tax deductible as well. Okay, if we've got no questions, thank you everybody for joining us today. I mean, if you do think of anything else, most certainly drop us a line. Our customer support team is here to help you, and we're running more little webinars on different features as we release them over the coming months and years, and we're here to help. So have a good afternoon, and we'll see you soon. Thanks. Bye.